Hey guys, how's it going? So in today's video, I want to explore the best performing ETFs, and I'm specifically talking about commission-free ETFs from the iShares. So I want to look at which ones have done well so far and are they, a good source of investment. So without further ado guys, let's get started. Okay, so I'm here on my desktop computer and let's take a look at exchange traded funds that are available on Fidelity. Now I'm using Fidelity. You don't have to use Fidelity, but I recommend Fidelity over other brokerage accounts. Now guys, this video is not sponsored by Fidelity, but I like Fidelity because they have been around for a long time and I like the tools that they provide. Their website is actually very functional and it's not a mobile only experience like Robinhood and all those other services. Now if you don't have a Fidelity account, you can still do the exploration, but not all the features will be visible. So I highly encourage that you create an account with Fidelity, and creating an account is pretty easy. You just select the brokerage account unless you are interested in retirement funds like IRA, but I guess that will be the topic of a separate video. So let's research the ETF offerings from Fidelity. So what I do is I usually go to investment products here and click on ETFs, and then you get this page. Now here you have access to all the ETFs, but we are only interested in what are known as commission-free ETFs. So I don't want to pay commission when I buy or sell ETFs. It doesn't really make sense to do that in 2021. And all the good ETFs actually are available here on Fidelity in the commission-free section. So let's focus on commission-free. Now another important thing is the expense ratio. So you want a fund with low expense ratio. Expense ratio basically is the money that you are paying to Fidelity or whoever is your brokerage for the privilege of actually holding the ETFs. And I don't want to pay, I don't want my money to work for my fund manager. I want my money to work for me. So I always pick funds which have low ETF. So those are going to be our criteria for today. So let's take a look at the offerings here. So you have the Fidelity ETFs, you have iShares ETF, and then you have all the commission-free ETFs here. So let's click on all the commission-free ETFs that are available, and we are going to focus on iShares. So I will click on iShares, and I want to take a look at all the iShares ETF that are available for buying and selling here in the Fidelity account. So here is our list of ETFs. Now like I said before, I have few criteria that I want to focus on. So the first criteria that I will focus on is going to be the expense ratio. So let's come here, let's look at the net expense ratio. So I've added that here in my field. The other thing I want to look at is the performance. We are interested in the ETFs for 2021, how well they have performed so far. I'm interested in the market total return. So let's select that, and I will say year to date, and I also want to look at the 1 year performance. Okay, so this looks good. I have got my expense ratio here, market total returns year to date, and the 1 year performance. So let's sort the performance, and so here we have the top 3 ETFs. Now if you take a look here, our top 2 ETFs are oil and gas and energy ETFs, and I find this very interesting because everybody is going gaga over Tesla and electric cars, but guys, there is still enough money to be made in old school oil and gas and energy sector companies. So do not exclude these ETFs. So this is really interesting. The number one, let's explore the first one. So this is IEO, that's the ticker, and this is iShares US Oil and Gas Exploration and Production ETF. So let's take a look at this ETF. By the way guys, this IEO ETF, it's an index fund. So you don't have a fund manager who is actively selecting which companies, stocks to buy or sell. Instead, what's happening here is that this ETF is tracking the Dow Jones US Oil and Gas Exploration and Production Index Fund. So this is a passive fund, and that means it's not going to cost you a lot, and that's the reason why the expense ratio here is only 0.42%. So that means if for every $1,000 that you invest, you only have to pay around $4 of commission. So that's not bad. So let's take a look at its performance. Here I am comparing the performance of this ETF with the S&P 500. So as you can see, as the global pandemic hit and all the economy was shut down at that time, this fund took a major hit, and that makes sense because people were not driving, everybody was in home, people were not flying. So the oil and gas, these companies took a big beating. But as you can see from here, after November, this has recovered really nicely, and as the economy is opening up, this one is going really well. So it's 75% in the last 1 year compared to 38% return from S&P 500. So this is a fantastic growth that you are seeing. Well, the past performance is no guarantee for future growth, but based on this trend, and because the economy is opening, all of us eventually we are going back to work and people will be traveling in airplanes and driving more, I expect the this ETF to actually keep performing. Okay, so let's take a look at the top 10 holding for this ETF. So you you see all gasoline and energy companies here. So this is interesting. Now I'm interested in actually the exposure here. So this is 100% North America, so you don't have any exposure to Middle Eastern countries or any of the other regions of the world where you are worried about, you know, political stability. So that's good. It's 100% United States. And if you look at the market cap, this will mostly qualify as a mid cap and as a large cap ETF. Now sector is almost all 100% oil, gas and consumable fuels. So this is, like I said, an old school fund. You are investing in old school gasoline and petroleum companies, oil and energy companies, but these companies are actually outperforming S&P 500 and you are getting very good return from this ETF. So finally, let me summarize this ETF. You have 0.42 expense ratio. You have a performance, the last 52-week performance of over 75% return, which I think is fantastic. And this is a zero commission ETF, and you are not paying the fund manager a whole lot of money because this is a passive index, ETF. So fantastic choice. This is IEO. This is the #1 top performing ETF for the year 2021. If you're looking at iShares ETF. So let's keep moving, guys. Let's go to the number 2 in our list. The number 2 was iShares US Energy ETF. So this is very similar to the first one. Let's take a look at this ETF. So I have the tab open here, and this one also has an expense ratio of 0.42%. It's all exactly the same. The returns are actually lower. So what is the difference here? So let's take a look at, so by the way, this is the comparison with S&P 500. It is still beating S&P 500, but it is not performing as well as the first ETF that we just took a look at. Okay, so here is the industry and sector exposure. So this is oil, gas and consumable fuels around 90%, and then you have energy, equipment and services, and there is some electrical utilities, and you have some semiconductor equipment. So that's very tiny, 0.6%. So let's take a look at the companies that this ETF is holding. So you have ExxonMobil, that is the 23%. So almost a quarter of your investment is going in ExxonMobil, and then you have Chevron, ConocoPhillips, which was also there in the first ETF that we looked at, and the rest of the companies are also petroleum and energy companies. So this is similar to the first one, but its performance, it hasn't risen as fast as the first ETF, after the economy started opening up. So let's take a look at the technical analysis here. So the short-term performance, it's actually being rated as weak, but you have a strong next 6 weeks to 9 months, which makes sense because as the economy opens up and as more and more people start traveling and driving, these companies are bound to do better. And long-term sentiment, according to the Recognia technical analysis, it's neutral. These two look very similar, but I guess the distribution of the companies that these funds are holding is making a difference. So between these two funds, I would definitely go with IEO instead of this one, because both have the same expense ratio, so it will cost you the same amount of money to hold these funds, but the first fund is actually performing better. Okay, so we are back to our top 3 list, and the number 3 here is iShares Value Sector ETF, and this I think is really interesting because usually the value sector ETFs are considered as like more conservative ETFs, and people who want good performance, they usually go for high growth ETFs. So here, at least for the year 2021, the first 6 months, this ETF has actually outperformed S&P 500. That's really interesting. So here is the chart, and it's actually pretty phenomenal. This has got 68.21% return, which is so much more than S&P 500, which is around 38%. This ETF has an expense ratio of only 0.25%. So this is a really cheap ETF. So that means if you put $10,000 in this ETF, it will cost you only $25, for the maintenance of this fund. So that's really cheap. So let's take a look at the top 10 holdings for this ETF. So you have a combination of entertainment and financial companies here. So you have Lion Gate Entertainment, you have Discover Financial Services, Alive Financial. So let's take a look at the sector and industry breakdown here. So if I look at the industry exposure, you are exposed to around 27% banks, 25% insurance, 7% capital market, and then you have entertainment, consumer finance and other miscellaneous exposures. And sector wise, this is 69, almost 70% in financials, and then you have information technology, little under 10%, communication is around 6%, and then the rest of the stuff. So these are value oriented companies that this fund is exposing you to, and surprisingly these value companies have outperformed the growth companies, at least for the first half of this year. And this is is very interesting. So because this ETF is only 0.25% expense ratio, I think this is also a fantastic investment vehicle. You don't have to put all your money in this ETF, but putting a part of your portfolio in this ETF, I think is going to be a good idea moving forward if you are thinking of, investment ideas. So there you go, guys. These were our top 3 ETFs, the iShares ETF, which have performed the best, and they have a very reasonable expense ratio, and they are completely free to buy and sell on the Fidelity website. They have $0 commission. So if you guys are interested, I will drop a link in the description below where I will provide links to all these 3 ETFs, and I highly encourage you guys to open an account with Fidelity if you haven't done so already. It's completely free, and it's one of the best brokerage accounts in my opinion to buy and sell not just ETFs but also stocks and the traditional investing, mutual funds and stuff like that. So that's it for today, guys. I hope you found this video useful. If you have any questions or comments, drop them in the comment section below, and I will see you guys in my next one. Bye.